Picture this. You're scrolling your feed, sipping coffee when BAM America's national debt hits $38 trillion. That's not just a headline. It's a number so colossal it could buy every house in the US twice over and still have change for a moon base. But wait, who's on the hook for that IOU? Fingers point to China, clutching about $800 billion in US bonds. Fair enough. Except China's own debt pile? A staggering $62 trillion, bloated to 336% of its economy. So who's bankrolling them? Chinese banks, sure, but those banks are knee-deep in US treasuries. Flip the script. American banks hold Chinese and European debt. It's a dizzying daisy chain. Every nation borrows, every nation lends, and poof, the globe's total debt? $340 trillion as of mid-2025, quadruple the planet's annual output. If your brain's short-circuiting, join the club. It's not some Illuminati scam or ledger glitch. It's the hidden heartbeat of our hyper-connected world, a perpetual motion machine of credit, where stability is an illusion and growth rides on endless IOUs. Today, we're cracking open this beast, its ancient roots, slick mechanics, growth superpowers, and the ticking cracks that could shatter it all. And yeah, we'll peek at what happens if the music stops. Buckle up. This isn't your grandpa's economics lecture. It's the story of debt as our eternal frenemy, the buddy funding your dreams, then ghosting when the bill arrives. Debt isn't some millennial curse born in boardrooms. Nah, it's as old as grudges at a family reunion. Fast forward no, rewind to 3000 BC Mesopotamia. Clay tablets etch the first loans. Farmer Zimri owes 10 shekels of silver for seeds. Pay by harvest or lose your donkey. No apps, no APRs, just a pinky swear etched in mud. Debt was trust's ugly cousin. Borrow a goat today, return 2 tomorrow. Humans got it because life ain't linear. Drought hits? You eat now, repay later. It was borrowing from your future self to outrun today's Wolf. But scale that up, and empires get ideas. Fast forward to 1600s England. King Charles II's got a Dutch war brewing, but his coffers? Empty as a politician's promises. Nobles balk at fronting cash too risky, no upside. So Charlie innovates, hey public, buy slices of this war debt. I'll pay you back plus interest. Enter the bond, born in a smoky London tavern. Suddenly, states aren't begging fat cats. They're crowdsourcing conquests, no tax hikes, no crown jewels pawned. Bonds explode. By World War I, nations hawk trillions, in today's dollars, to arm trenches and toppled SARS. Post-World War II? Rebuilds on borrowed bucks. Then comes the pivot that turbocharged it all. 1944's, Bretton Woods. The US dollar crowns itself king-pegged to gold. Everyone else pegs to the dollar. Genius until it's not. America's spending spree, wars, highways, suburbs, floods the world with greenbacks, but gold reserves? Finite as a miser's smile. By 1971, Nixon snaps the tether. We're done with this gold nonsense. Boom fiat money. Dollars backed by, faith in Uncle Sam. Governments crank the printing press like it's free beer. Borrowing? No longer wartime desperation. It's rocket fuel for recessions, roads, and rocket ships. Cue the 80s boom. Reagan, Thatcher, Deng Xiaoping all juiced growth on credit. Debt morphs from scarlet letter to success story. Build schools? Borrow. Bail banks? Borrow harder. Today, it's the grease in the gears. That $340 trillion mountain? It's why your city's got that shiny bridge. Why China's ghost cities gleam, even if empty. Why Brazil's farms feed the world. Perspective time. Stack $1 bills for $1 trillion? It stretches 67,000 miles Earth's equator twice. $340 trillion? Wraps the planet 1,700 times, then ladders to Mars. Insane? Sure. But without it, we'd be bartering chickens in the Stone Age. So plot twist. If everyone's in hock, who's cashing the checks? Not a Bond villain cabal. Modern debt's no straight line, it's a Mobius strip, twisting back on itself. Let's zoom on Uncle Sam. Debt champ at $38 trillion. Shocker, 70% is owed to Americans. Yep, we finance our own frenzy. How? You stash savings in a bank, that bank? Doesn't hoard it like smog. It flips your dollars into U.S. Treasury's government IOUs yielding steady interest. As of now, U.S. banks clutch $2 trillion in bonds, dwarfing entire nations' GDPs. Why? Safety. Stocks yo-yo like a caffeinated kid. Bonds? Rock solid with Uncle Sam as guarantor. Lock in a 10-year treasury at 4.2% today. Your money compounds, risk-free. Pensions? 25% in bonds. Insurers? Over 60%, padding claims with low-drama returns. It's a sly alchemy. Your idle cash becomes government's jet fuel. Feds spend on infrastructure. Contractors pay workers. Workers buy lattes. Your latte funds more bonds. Interest paid? Back to banks. Who buy? A self-licking ice cream cone. Savers to spenders to savers ad infinitum. And globally? Same vibe. Japan's thrifty yen flow to Dutch dikes. Brazilian soy bucks boomerang to U.S. bonds. Foreigners hold 30% of America's tab. China, Japan, UK topping the list. Borders blur. Money's a nomad in an endless loop. No end holders. Just a web where debt's the spider, silk, sticky, and resilient. But here's the rub. How do they square the circle? Simple: if shady, roll over, old debt due, issue new bonds to pay it. Reckless? Like refinancing your mortgage forever. Yet it's the economy's bedrock. Why? Debt drives growth. Governments borrow, inject cash, businesses hire, consumers splurge, GDP swells. Cut the cord? Catastrophe. China's 19% of spending is borrowed. UN 1 in 5 bucks fuels factories. US? 1 in 4, rivaling schools and safety nets combined. Ever wonder why politicians dodge balance the budget like it's kryptonite? Because austerity's electoral poison. Greece learned that the hard way. 2008 crash. Investors ghost Greek bonds, deeming them toxic. Borrowing dries up. Spending craters. Public jobs slashed. 1 in 4 gone. Wages? 30% haircut. GDP. 25% nosedive by 2013. Riots in Athens, families scavenging dumpsters. Maria, a schoolteacher there, told reporters, one day, lesson plans. Next, food lines. Debt saved us before, now it's our jailer. Voters remember, growth via borrow beats breadlines every time. Crises amplify it. COVID? Economies froze. Folks hoarded, not spent. Uncle Sam borrowed $4.2 trillion in 2020 to 20% of GDP to pump checks and vaccines. China, Europe, same script, not optional survival. Taxes tanked, borrowing bridged. Wealthy spots like Germany roll cheap bonds at 2%, safe as sauerkraut. But for Pakistan or Sri Lanka? Trap city. They borrow dollars, stable, but foreign. Local rupee tanks? Repayments balloon. Interests snowball. Defaults loom. Sri Lanka 2022. Tea plantations idle. Tourists flee. We borrowed to eat, a farmer sighed. Now hunger's the interest, so why not quit? We can't. Debt's the pillars propping prosperity. Yank M? The house folds. But forever? Nah. Cracks spiderweb beneath the gloss. Interest chews budgets. U.S. now shells $1 trillion yearly on old loans, more than defense or Medicare. Debt to GDP at 130%? Normal now, but 80s economists would have screamed doomsday. Cheap money masks it. Panic flips the switch. Enter inflation, debt's sneaky sidekick. Can't borrow? Print. Flood cash? Each bill's worth shrinks. Venezuela's nightmare. 2010's hyperprint to dodge defaults. Bread? From 10 bolivars to 10 million. Savings? Vapor. My pension bought a yacht once, an elder quipped bitterly. Now, a candy bar. Moderate? Still stings. Savings erode, strikes spark. Developing nations hurt worst. Dollar debts plus weak currencies equals vicious vice. Lenders smell blood. Hike rates. Cycle. Borrow more. Print. Inflate. Repeat. Breaking point? Default. Argentina's done it 9 times. Can't pay, they shrug. Economy tanks, banks freeze, imports halt, black markets boom. No quick borrow fix. You're radioactive. It's fragile as a Jenga tower mid-party. One wobble, geopolitical flare, rates spike and poof. But humans hate vacuums. When faith frays, we clutch real stuff. Enter 2025's gold rush. Amid $340 trillion wobbles, investors poured record $200 billion into bullion. Why? Gold's up 48% year-to-date, smashing $4,000 Oz in October. Dollar? Down 10%, 3-year low. Silver? 43% surge, highs at $48.50 Oz. Junior miners? GDXJ ETF rocketed 130%. YTD. Big Bang Seco. JP Morgan eyes $4,000 by mid-2026. Goldman and Buffet nod along. This isn't hype, it's hedge. When debt's web quivers, gold's the anchor. Take GoldMining Inc. GLDG NYSE. A stealth play in the America's gold boom. Trading at tilde. $1.66 as of October 20, still a steal versus 2018 levels. When gold was half today's price, they boast 12.4 million ounces indicated gold equivalent across Canada, US, Brazil, Colombia, Peru. Plus a $180 million equity portfolio as of Q3 2025, eclipsing their $350 million market cap and $7 million cash hoard. Insiders, 1OM shares. Backers, BlackRock, Goldman, Venex GDXJ, led by ex-Gold Corp CEO David Garofalo and serial entrepreneur Amir Adnani. They're hunting reserve replenishment, the gold game's holy grail as majors gobble juniors to feed depleting veins. Gold stocks lag spot prices by a Grand Canyon, see that chart in your mind. Bullion soaring, miners catching up. GLDG? Primed with leverage to $4,000 gold. Not advised, do your homework at goldmining.com. But in a debt-dizzy world, it's a reminder, sometimes the real treasure's betting against the frenzy. So, what's our move? Debt's no villain, it's the invisible hand scripting progress. But ignore the risks, and it's Frankenstein's monster. Can it last? History whispers until it doesn't. Your turn. What's your debt story, the loan that launched a business, or the bill that broke a bank? Share below. In this loop, we're all lenders, borrowers, survivors. The cycle spins on, but wiser eyes spot the exits. Stay curious, stack smart, and remember, tomorrow's promise is today's power. Until next time, subscribe to the Capital Historian Studios channel for more such videos.